It seems like there's a lot to like in this report. I'm going to start, given that, I'm all like a perpetual pessimist, I'm going to start with the glass half empty scenario. Was there anything in here you didn't like?
Romain, going across, you mentioned revenue and EPS both beat. They also beat on commercial cloud. They beat on intelligent cloud. Really, you look across the board, productivity and business, they beat. There really isn't any segment data here where I see a miss. Azer was at 33%. Street was looking for 31 to 32. The big number, Romain, is what you've already kind of alluded to, I believe, and I haven't had a chance to check it because I'm in the studio, but we need that guide for fourth quarter on Azer, and the consensus is 29%. Everyone's worried, right, because of what happened with GCP missing, and obviously we roll now into Azer and AWS tomorrow. Is that we're starting to see some sort of slowdown in terms of data center spend rates, and so that's the key guide number, that fourth quarter Azer growth rate.
Well, that's what I'm curious about, too, because, the numbers, at least for the quarter pass, held up. But then, like I said, with the warning from Supermicro last night, we just got Confluent earnings just a little while ago today, also all seeming to suggest that maybe there is softness in that space. Of course, Supermicro isn't Microsoft. Confluent isn't Microsoft. Can they weather this storm?
Romain, Microsoft's in a very unique position because, as you know, they have grown their top-line revenue growth 8 consecutive years plus 10%. They are the behemoth in the enterprise software space, right? Next to Oracle. Those are the two really big companies. So I think they're in a much better position than, let's say, other companies like the chip companies, NVIDIA, we're going to talk about a month from now. Other stocks like, PCs, smartphones, where you really get that heavy black cloud surrounding the tariffs, where really Microsoft, other than in data center, maybe component costs in terms of their servers, but, and potential slowdown related to slowdown in GDP in terms of IT spending. But, they're not as subject to all the worries that we have in the tech space. Does that make sense?
Yeah, absolutely.
So, Dan, I look at what's happening right now in after-hours trading. Microsoft higher after beating on almost every metric. Meta higher. And, of course, we had Alphabet, which was very encouraging. Tesla is a whole different story because it's kind of its own, it's got its own drivers, its own factors. What does this mean for the tech sector at large? And here I'm talking about infotech, but also communication services, which is what Meta is included in, regaining their leadership of the market. You have the NASDAQ 100 back at its April 2nd level. So it's erased all of the losses it's had since the Liberation Day announcements. And now that we're at an even level, can they regain their leadership that they had been showing up until the end of last year?
I think, Scarlett, if we reverse back last week and looked at Google's numbers, they missed on GCP. Their numbers were good. Their ad revenue growth was up maybe 8 or 9%, a little bit below what they did the previous quarter. But we look at these numbers, these are blowout numbers. Meta and Microsoft both beat on just about every metric. And I think this kind of sets the tone, guys, because we're going to go in tomorrow, right? We're going to get Apple and Amazon, right? If they also can have really big beats, we can get some good momentum back into the tech space and hopefully get the tech stocks to rebound off of their lows. Because right now, if you look at the S&P Information Technology Benchmark, it's down about 16% off highs, and the S&P is only down 10% off highs that we had in February. So the tech has been held down. But if we can get some more momentum and some more positive reports, Scarlett, and keep that thing going, then we can ride into, NVIDIA in a month, and hopefully we'll get some positive trading back and momentum back in these stocks.
And then when we talk about the impact of tariffs, the legacy from the April 2nd announcements, you have the Meta outlook.
It's huge.
Yes, I know. The Meta outlook, including the increase in expected cost of infrastructure hardware, of course, increase in cost for its AR, VR hardware as well. But everything else is a little bit more derivative, right? It affects sentiment and affects business spending, and we'll see how that plays out for the companies like Microsoft, for instance. Can we basically say that these companies are more resistant, less vulnerable to the tariff headlines, to the tariff whiplash than others?
You're right, Scarlett, because, you just mentioned component costs. They're talking about Azer with Microsoft, the cost of building the data server centers. And then you mentioned Meta in the same situation. And then you look at Meta, the only concern coming in for this was, would some of these very large Chinese companies cut back, right, on spending in terms of digital spend rates with the likes of, let's say, a Meta or a Google. But I think you make a good point. Now, tomorrow we're going to get two poster childs for tariff impact, right? Apple and Amazon, right? And we can go into detail on how they're being impacted, but they have much far greater impact than you would see out of Microsoft and Meta. And, you know, Scarlett and Romaine, tomorrow we're going to hear a lot more about that, right? In terms of those tariffs. So right now they seem almost immune to a certain point, right?
Well, speaking of those tariffs, sorry, I have to interrupt you, Dan. We are getting some breaking news right now. We're now learning, based on Bloomberg reporting, that officials from the European Union are going to actually present some trade proposals to the United States sometime next week. Again, this is according to people familiar with the situation that our Bloomberg reporters have spoken to. We should point out we are seeing a spike in futures here on the back of that headline, so something to keep an eye on. And it gets to this idea, Dan, that while the market, of course, has been weighed down over the last few weeks by concerns about trade and tariffs, if for some reason the market thinks that that threat is removed or at least minimized to some extent here, is there, I guess, an extra boost to this stock? I'm talking on top of whatever own internal fundamental execution they're having that could sort of increase. We could see an increase in multiples as a result.
Well, you're right, Romaine. I mean, let's face reality. If we came out with a headline that said, you know, tariffs removed off the table, these stocks go way, way up. You know, you talk about catalysts. I mean, you know, we've talked about Meta in terms of refining their AI, being able to target better for customers, for their clients, and so forth. You look at Microsoft with things that they're doing in terms of ChatGPT and Azure. I mean, those catalysts are still in place. And, you know, you mentioned before I came on, in terms of Microsoft is still holding on to their CapEx guide, $80 billion for fiscal year 25. So they're going to continue to put more money in building this out. So there are still a lot of exciting things. AI is still very resilient. If we could just get this black cloud off the roof, Scarlett and Romaine, these stocks would probably go back to where we were before this whole thing got started.